So just a real quick market update for this morning. I think it'll be fairly quick because there's a lot of news actually coming up today, which could be market drivers. We're already seeing a little bit of an impact right now, a pretty big impact right now from the ECB monetary statement that just came out, and then we've got a press conference coming up here in about 30 minutes. So lots of stuff going on that, kind of pre-market for our indexes, but for those that are trading in currencies, that's impacting us directly right now. So let's go ahead and run through it real quickly, and then we'll just let you guys get on with your day. So starting over here, well, let's just start here. What we've got going on today, we just had the monetary policy just came out, and market certainly is reacting as a result of that. We do have the ECB press conference, though, coming up in 30 minutes, which is coupled with U.S. unemployment claims, some revisions to non-farm information here, as well as trade balance. So there's a lot, and then Canadian trade balance as well is coming out. So there's a lot of news kind of stacked on top of one another here in about 30 minutes. And the press conference could certainly be interesting because the Q&A, while the initial part of the press conference really is just going to deal with the official statement that came out over here, the Q&A can get interesting around the press conferences. So, be sure to find a location to pull that up. And, while I would discourage watching it for the content itself, at least be aware of when it's going on and when it ends, because once it ends, then you can wait a few minutes and see how the market actually is going to react, and then begin taking action as the market returns to normal, right? Action per your plan, not action based on what you heard or what you think is going to happen or anything else, because like I keep screaming from the rafters, the market doesn't care what you think. Doesn't care what I think. Doesn't care what you think. Doesn't care what anybody thinks. The market's the market, and the market is not the economy anywhere. And there's a huge disconnect, between the market and what's actually happening out there, driven by monetary policy and printing of money. A buddy of mine asked the other day, well, I won't even go down that road. Anyway, let's just leave it at that. There's a lot of stuff coming up. Find a spot to watch the news conference, and this applies to any news conference, by the way. Don't watch it necessarily for the content. Just at least know when it's done, so that you can see what's going on and see when it's safe to go back into the market, and then take action based on your plan from that point forward. For me, a news source that I love, my friend Amar Hussain runs a site called Financial Juice, and I love the site. I've been using obviously for years, since he first rolled it out as a beta to me, and it's gone through some changes. But at the top of the page, you'll find anytime there's a high impact news conference occurring, it'll automatically pop in here and embed in here, so you don't have to hunt around for it. If you want to watch that ECB conference, you can. It'll just pop up over here. This site's a news aggregator site, and it pulls in headlines, tweets, whatever, from multiple sources, so that you can find them in one spot, and you can customize what it is that you're looking at there. If you go to My News, I'm sorry, where's the setup deal on this? You changed it to oh, is it more feeds? No, well, maybe it's over here. Yeah, news settings, my bad. It's been a while since I had to set it up, but you can go to your news settings, and you can tell it what you want to follow and what news you want it to pop up on there. Don't select everything, you'll just be overwhelmed, but find the things that are important to you, and you can put those up, and then see those headlines and that information coming through as it becomes available throughout the day, so you don't have to go around the different areas looking for what's going on. So it's super cool. He kind of has some pre-selected stuff here, so if you're a Forex trader, you can just click Forex and it'll automatically select some stuff for you. If you're futures, automatically select stuff for you, so on and so forth. Or you can just kind of make your own from there. And obviously, as stuff occurs, it's posted in here. You've got red alerts, you've got unusual options activity posts. I mean, a lot of great information. So I know it sounds like a paid ad for Amar's site. It's not. He's just a buddy of mine, and I love his site, and I think it's something that everyone can get a lot of use out of if you if you choose to use it. If for no other reason than the fact that you've got a spot that automatically embeds any high impact reports and press conferences without having to hunt around for them. He does that work for you and puts them up. So anyway, quick shout out to Amar and Financial Juice. So there you have it. Over here in Forex, what's going on? Should we trade Forex right now? The answer is no. we can see why. There's crazy stuff happening right now. Obviously, Euro very heavily reacted to the news that just came out. USD obviously reacted to that as well. We can see, a big divergence between the Euro and the USD. The yen as well. US and the yen typically are pretty closely correlated, and so we see a move there. The oddball out here is the pound. The pound's not really reacting to this at all. And actually right now there's a nice divergence. You've got the pound versus the Aussie that's seeing a really nice divergence right now. And if we go to that chart over here and pull that in, if it weren't for the ECB news coming up in 15 minutes, I guess about 20 minutes, this would be a beautiful trade. We've got the pound kind of hanging out here right around the midpoint, but weaker in relation to other currencies. We've got the Aussie as a slightly stronger currency here over the course of the last few hours. It's been in a pretty tight range, and currently we've traded about 77 pips on an average of your high hundreds into the 200s. So certainly opportunity there for potential movement, and the volume detail is certainly supporting this to continue to go shorter. If we look at this on a longer time frame, let me just move this over a little more, we can see that the trend has actually been continuing down. So looking to short this would be in direction with the trend. It'd be ultimately breaking out of this current range that we're in a direction that is currently supported by the divergence that we see here. However, there's news, there's high impact news, which could throw a wrench into everything. And we had the monetary statement that already came out, so maybe that's behind us. But with the ECB press conference, you've always got the Q&A at the end that can throw a wrench into things, especially as people try to interpret what's being said there and read between the lines. Everything we say in today's world is just analyzed to a insane degree. So the same thing will happen there as sound bites come out of the press conference, especially during the Q&A, that could change what's going on. And rather than make a gamble, we just stay away, stay out of the sidelines. So nothing happening there. For the let's go over here for the futures aspect of things, looking at crude, looking at gold, looking at the S&P, lots of opportunity there. This is a really good example. Just pull this one up. This is a really good example of how, I guess, how we can sometimes look at things, and I'm just speaking for myself personally here, but how we can sometimes look at things and have certain situations occur that might cause us to want to break our rules. And a good example for me this morning is, I got up and I'm looking at how price had been moving overnight, and I see price come down to 3,100, and my finger is moving over to the button like, let's just buy this right now. We've come down to a key level, 3,100, key psychological level. It's a big number, it's a whole number. Wanting to click the button, and obviously it's not time. It's not during my trading hours. It would have been just a impulsive thing to do. Didn't click the button, obviously, because it's not part of my trading plan. And then the market just blows up, right? Now you're looking at that going, man, I missed out. So then the little, I talk about the little devil and the little angel on your shoulder all the time. The little devil on my shoulder is going, holy crap, dude, you missed out. And that mindset is what takes us down a path of wanting to potentially break rules. Right now, at this point, you think about chasing the market. At this point, you might think about, man, if I had done that at this time, it would have really worked out. And it's really dangerous. It's a really dangerous mindset to get into if you let yourself go down that path, because you start thinking about what could have happened or what might have happened if you had broken the rules. And it provides you with a positive reinforcement of a negative action. We want to try to stay away from that as much as we can. The more we just simply follow a methodical process and stick to the rules, whatever that rule is, and I say the rules are whatever rules we've laid out for ourselves for our trading plan. As long as we stick to those processes, everything else falls into place. It's really dangerous once you start opening the door to something like that, to a slight bend of this rule or a slight bend of that rule. Quickly the entire trading plan just melts down, and you might look back in a week, you might look back in 2 days and realize that you've totally blown your plan out of the water, and that's going to have a detrimental impact to your overall trading success. So anyway, just wanted to share that with you because it was one of those impulsive things I looked at this morning, and I think a lot of people do that. I think most people, if you're honest with yourself, have those moments all day long, every single day, where you're looking at something and trying to convince yourself of why that might be a trade, even though it hasn't done what it was supposed to do in order to allow you to take that trade based on your rule set of whatever it is that you've documented. So be very aware. It's a person that personal self-awareness is a big deal, and that's one of the reasons I don't just read trading books. I don't know where my book is, but there's a lot of different books that I feel like are really good trading books that aren't even trading books. Four Agreements is one. It's a great book. Just talking about 4 agreements with yourself, of having positive self-talk and things. The Power of Now, really good book. Atomic Habits, it's another one. Just some things that they're not meant as they're meant as just personal growth, but that's what trading is about. It's about personal growth. I mean, it's obviously about, we want to be here to make money, but we've got to be very personally aware of what we're doing and what's driving our decisions, and having ways to stick to our plan and whatnot, because that's the biggest disconnect. I know I'm going on this long thing and not looking at the market, but that's the biggest disconnect for everybody here when it comes down to trading. The trading part of it's easy. The hard part is we don't actually stick to the plans that we write for ourselves. So the more we can do to create personal awareness, the better off we're going to be in the long run. We're going to have days where we slip, and we're going to have days where we do things that are outside of our trading plan, and we have to just be able to accept that, reset, and move on. So anyway, don't mean to go off on that long tangent. Let's get back over to this. So what are we looking at for the day? Well, obviously, we're going to have news here in about 15 minutes, and that'll set up kind of what's happening for the day. Don't trade the news. Wait for the actual regular trading hours to begin, and then take action based on what the market's doing at that point. Right now, leading up to that point, we are still on a long bias. Our 4-hour bias is long, and our 30-minute bias is long. So we would be looking at buying opportunities. Unless something changes and the bias, suddenly flips before we get to our regular trading hours, right? But for now, leading up to it, we're in a long bias on both of these. So long bias. So we'd be looking for buying opportunities. What is a buying opportunity? That's really going to depend on your specific trading plan. Buying opportunity could mean that we're looking for a break of a key level. So you might look up here at the top level up here on a 4-hour 31.25 is a key level. It pierced it yesterday, couldn't stay above it. Pierced it, came back again and tested it, couldn't stay above it. It's a pretty long ways away from where we are trading right now. So if you're looking for something a little bit closer, we could look right across here. We could look right across here at that 31.14, 31.15 area, and say, hey, if we break 31.15, that's my buy entry. Flip side of that is waiting for a pullback, which would be down to 3100, 3090 area, which is 3088. It's on our 4 hour, right? So that 3088, 3090, just to use whole numbers, that 3090 area, waiting for a pullback there to see if we could buy off of that and go long. Of course, the trading style that I really like is using that pullback, but also watching it on even a little shorter time frame, and as it pulls back, trailing my potential entry point down based on the tops of the previous candles, looking at that lower high, lower low as those things close, bracketing in from that previous candle to look for a break from there. But ultimately, we're long. So until this bias flips over and changes, we're still looking at long opportunities. So that's what we're looking for there. Crude, exact same thing. 4 hour is long, 30 minute is long. However, this has pulled back a bit, and we're starting to enter a bit of a channel here, on crude. So really kind of between this 37.20 and 36 down here. But right now we are still long, and until something changes, we would still be looking for long opportunities. Now, if this 30-minute rolls over and it pushes down a little bit more and kind of breaks down below this 3600, we'll see this change, and then we'd have a mixed bias, and that would tell us, hey, let's just not do anything. Let's not trade anything until we get either the 4 hour rolls over as well, or the 30-minute rolls back to a long bias as well. But for right now, both of these still have a long bias. And with that said, we'd be looking for long opportunities. So that could mean a break of 37. If we break above 37, that could be our opportunity to buy. Or looking at pullbacks back down to this 36.40, or maybe even as low as 36.20. But 36.40 probably is a good level down here. But as low as 36.20, looking for continued opportunities to buy and go long on this. I know the arguments in every market that we're looking at, especially right now, looking at potential longs, the argument is, man, I think we're at the top. I think we're at the top of this. And yeah, maybe you're right. I don't know. No one knows. Maybe you're right. The challenge is that thinking is not trading with that trend, and it's fine to be contrarian as long as you are prepared to be wrong and have something to limit your stop. Limit that risk, limit that potential loss. Totally fine to be contrarian. Absolutely. Find the tops and sell them. But if it breaks it and keeps moving higher, bail out of it, right? I don't know if we're at the top. Personal stuff, I don't know how the market keeps doing what it's doing. It's so freaking disconnected. I mean, look at Disney, for example. They've got no freaking revenue, and they're blasting higher. It's stupid. But that's irrelevant. It's doing what it's doing. You just go with it, right? I keep saying, the flea on the elephant's back is not going to change its direction. We're all fleas on the back of the elephant that's the market. We're not going to change the direction of what the market's doing. We as retail traders, the safest thing to do is to just take that ride, right? Just take the ride, So that's all I can really say. That's all I can really say about that. I kind of sound like Forrest Gump. That's all I can really say about that. But it is what it is, right? That's all we can really do with it is go with what it is. If you truly believe that it's too high for you to participate in, just be in cash and wait for it to do something that moves in the direction that you're willing to take part in. So anyway, over here on gold has been beating us up, man. Gold has been all over the place. It's been crazy, but the trend the last couple of days, the bias has moved down. So we're in a short bias on gold. So our 30-minute is short and our 4 hour is short. So gold, we're still looking at short opportunities. 1700 was tested and held up yesterday, and it's holding up. 1700 is kind of that line in the sand down here. But right now, we are in a short bias, so you'd be looking for selling opportunities. A couple ways to look at that. If we float back up to 1720, we could look to sell off of that, or look at breaks down here of 1705, which is a key level. If you're dialing it in a little bit tighter on your 30-minute, you're really kind of in the same boat. We floated up a bit here, so we're still looking 1720, 1705. Yeah, it's really no different. So yeah, that's what we'd be looking at for gold to continue short. Now, of course, if this rolls over and we start breaking above 1720, close above 1720, it's very possible that at that point we'll see our bias change, and at that point we'd have a mixed bias between what the 4 hour is showing and the 30-minute is showing, and it would just be that signal to, hey, let's wait things out and see what happens and wait for things to come back into agreement, because it's all about risk management and taking safe trades, right? It's all about being consistent in what we're doing. Over here on the futures side of things, or futures, over here on the crypto side of things, where's crypto? Still in long bias on both ETH and Bitcoin. We talked about Bitcoin a couple days ago. We had cracked 10,000. We mentioned the fact that it's a spot where, where a lot of people are going to be taking profit. We talked about just the new players in the market, the more institutional money that's in the market. It's still a tiny market. So the crypto, while it is definitely gaining momentum and gaining interest, and you've got bigger players in it, overall the market itself is minuscule. It does not take much to move this market. So if you've got institutional level money that has some things set to start selling at certain levels, for instance 10,000, every time Bitcoin cracks 10,000, we see a lot of profit taking, a lot of selling off right around that. I think you're going to continue to see that, because it doesn't take much to start that move, and then once the move starts, you've got other things. There's so much algorithmic trading in crypto, more so than you have in other markets. Even it seems like at some level it's pretty easy to trigger those those various things that would cause increased buying or increased selling. So anyway, with that said, it has pulled back off of 10,000 over here in Bitcoin. However, we've come down to a key level, which is back at this 9,600, and we're certainly looking for this to continue long off of that 9,600 level. Here on Ethereum, same thing. 240 is a big level for us, and we did finally push above it yesterday. And this would be another area, if we float back down to it, to look to continue to accumulate if you're trading with that style of strategy. So the overall gist of this is we are still looking at long opportunities on both Bitcoin and Ethereum. So anyway, there you have it. So with that said, we're going to wrap it up here. We got about 4 minutes left until the ECB press conference begins, until the Canadian news comes out, until the U.S. news comes out. So I imagine that here in a few minutes we'll see quite a bit of volatility around that news, and probably even for the next at least half hour, after this half hour or so, as that ECB press conference goes on, and as we get into the Q&A from that. Of course, regular trading hours, will begin at 9:30 Eastern for our indexes here anyway, and we'll see what the market brings for that. Bottom line, I sound like a broken record. Have a plan, trade the plan. Have a plan, trade the plan. All right. What I'm going to start doing, just switching gears and just using the couple of minutes I have left here, is when I started this channel last year, I used to post every trade I made, and I posted pretty much everything about it. I went away from that because I don't want people using it as a signal service. I'm not here to provide trading signals. I want you to come up with your own plan. However, someone did ask me yesterday, a friend of mine called me and was asking me about trading with smaller accounts. How do I get started if I don't have a really large sum of money just to throw into the market? And that's a great question, and it's something that I don't know is often really answered. And that's one of those things, right? Small account is a subjective term. A small account to one person might be a couple of months' wages to someone else. But I'm gonna consider a small account, meaning something that's $1,000, maybe less, $2,000, right, as a small account. So obviously that level of initial investment, risk capital, limits what you can actually trade, right? So it limits you to, so if you're $1,000 or lower, I'd say it limits you to Forex and cryptocurrencies. The minimum, you could, gosh, I don't even think you could trade micros with $1,000. I think you'd probably be $1,500 to $2,000 to trade micro E-minis, right? So your indexes, there's some micro futures indexes, right? So we could trade the S&P as a micro, we could trade NASDAQ, the Dow, all this we can trade as micros. And I like micros because, especially even with larger accounts, you can dial in your risk levels to almost within a few dollars using micro accounts versus standard lots. But anyway, that's moving away from what I'm getting to here. But how can you get started with those smaller accounts and grow them? So it's really thinking through what markets are open to you. Forex is interesting. I love Forex. I've lived in Forex for, a lot of years now. That was kind of my main focus with some of the programs and folks that I was supporting, was specifically in the Forex market. There is a less, so Forex is interesting, right? Because there's opportunity there, there's a lot of leverage there, but that can work for and against you. There's a lot of different ways to approach it. Crypto, I think, is probably a little more predictable. It's a little more predictable than Forex. Forex is because it's a utilitarian market, there's a lot of randomness that doesn't really set itself up around some of the strategies using, let's say, support or resistance or trends or whatnot. Forex markets are a whole different bear. I love them, absolutely love them, and it's a interesting topic that we could go down a rabbit hole for a long time. We can go days and days just talking about Forex and the differences of it and other markets and whatnot. But I would say if you've got a smaller account, that's $1,000 or less, you look at Forex or crypto. Find and I talk about every morning a Forex trading process that we can do, just one trade a day, looking at currency strength to find out what currencies are moving and pushing the button. That's a super easy way to start in Forex. In crypto, crypto is a little tougher because the most brokerages that offer you the ability to trade both directions, margined brokers, don't always accept U.S. clients. So there's some workarounds that you have to get into there using VPNs and some sources to put you outside of the country in order to set up those accounts. So that's a little bit tougher, but something we could certainly talk about. And then if you've got a $2,000 or higher account, I think we could look at trading some micro futures. So anyway, this has been like a 4-minute just off the cuff, but I think what I'm going to do beginning next week is open like a $2,000 account and show how we can trade that and build it up, and then how we would step that account from one thing to the next to the next to the next. So for example, and why 2,000? Because with 2,000 we can start looking at micro indexes, right? So showing how we can take that account and step it to a certain level that would then allow us to start trading in the mini indexes and in crude and gold and things, right? Because you have to have a larger account. I think you need to probably have at least about $5,000 to $6,000 to start trading. So the goal will be to take that $2,000 account and over a couple of months grow it, and then just show how we would step up and then start diversifying that account into other processes. So anyway, that's the direction we're going to take beginning next week. Still going to do the exact same thing in the morning, but then I'll just do a recap every day of what's happening with that account. I'm not going to post trades as I take them, because obviously if you're trading, you're trading, and if you're posting, and they don't always go hand in hand. But we'll just do something with that account every day to show what it's doing, how it's progressing, and how it's moving on. I think that'll help some folks that have asked that question of me, which is, how do I get started? Because it does seem out of reach, especially if we're talking about trading oil or trading gold. You need a larger account to do that, just in order to be able to accept the swings that occur and looking at the risk that's there. So if you have a smaller account or just starting out with a lower amount of risk capital, because you don't want to put everything on the line all at once, we'll talk about how to do that. So that's the direction we're going to take beginning next week. All right, so anyway, that's it. That's all I got for you for today. News is starting. The ECB press conference is starting right now. It should be anyway. What's the market doing? I can't see. Not a lot of craziness right now, but we'll see as that goes on what really happens as this press conference gets going. Again, if you want to watch the conference, you can do it over here, financialjuice.com. It's streaming live, so go from there. So that's it. Have a great day.